Hey, what's up guys? John here. Many would argue that the biggest bubble in the economy, it's probably the housing market. If you look at rents are increasing at an astronomical level. Rents have increased at such a huge level the last couple of years that many people simply can't afford a basic place to live. Everyone's struggling financially. And many would look at home prices over the last 3 to 4 years. Many markets have seen appreciation between 30, 50, 70, in some cases 100%. Prices are getting out of control, and many would argue that this is in fact the biggest bubble. I would argue that the biggest bubble in fact is the automobile industry. Even though we've seen indicators in the housing market that we're stepping into problems. Bank of America is issuing layoffs. Wells Fargo is issuing layoffs in the mortgage division. Better.com, same thing. And even a large industry giant, First Guaranty Mortgage, they recently just permanently closed their doors, and they're in the process right now of filing Chapter 11 bankruptcy. Chapter 11 bankruptcy, and they've already laid off 80% of the workforce. First Guaranty Mortgage originated $10.6 billion worth of loans in 2021. Now they do nothing, right? So we're looking at this. We're looking right now at more than 12% of new car payments top $1,000 per month. Significant. And right now they're saying that the average car payment is $686 in June. This is per monthly full. However, Business Insider and many others are saying that it's actually $712 per month. So just to put this into context, if the average American, let's say, makes $50,000 a year, when in reality the average American makes about $40,000, but for easy math and just to kind of overshoot it to be conservative with this underwriting, $50,000 a year is about $4,000 per month in gross income, right? $4,000 per month in gross income. If the average car payment is $700 and insurance is about $300 a month, and then they put, say, $100 a week in their gas tank, right? That's about $1,400 per month just with their vehicle. This is not including any maintenance. That's about 25% of their overall gross monthly income. Then we look at most people are spending between 40 and 60% of their gross monthly income on rent. That puts people in a situation in which they are spending about 65 to 80% of their monthly income strictly on an apartment and on a vehicle. This does not include utilities for that apartment. This does not include clothes, food, which has greatly increased in price, health insurance, cell phone bills, internet bills, any of this, right? It doesn't include any of that. It just goes to show that one of these is going to have to give. And I think that what people are going to likely do first before giving up their house is that they're going to reduce their car. They're going to go from the $50,000 car to a $35,000 car, to a $40,000 car, from the $30,000 car to a $15,000 car. People are going to really start to downsize. But the problem here is the fact that there's just so much debt in this market that most people won't have the equity in their car to actually walk away from it. So instead, they're going to have to allow either a repossession to take place, or they're going to have to try to come up with some type of deal with the lender. Now take a look at this. 12%, right? Higher APRs mean a larger total repayment amount. Edmunds said that with a 72-month car loan for $40,000, going from a 4% APR to a 5% raises the total cost by about $1,234. Nothing massive, right? Nothing major. While signing with a 6% APR compared to a 4% means you'll pay $2,672. That is significant over the course of the loan. But what we're likely going to be seeing here, now that inflation numbers came back at 9.1%, is that we are going to likely see another interest rate hike between 75 basis points and potentially 100 basis points. Now, what this would likely do is get passed on to consumers, everyday consumers that have credit card debt. Now, the numbers that I just factored in with the average American making $50,000 a year, that information comes if the average American has no debt, right? If that person had no credit card debt. Most people have significant credit card debt. So it just goes to show that personal debt is going to get much more expensive. Auto debt, all of these loans are going to get more expensive. And so we're going to witness something very, very big here. I believe this is going to really be the beginning stages of a massive bubble that's going to get exposed very, very soon. Call it a case of a double whammy. A shortage of new vehicles caused by the pandemic-era supply chain backlogs drove up car prices in May. The average transaction price of a new car vehicle was up 13% year over year to $47,148, according to Kelley Blue Book. In addition to that, interest rate payments are higher because the Federal Reserve is engaged in rate rising duel against inflation. The average annual rate on a new car loan last month was 5.2%, up from 4.4% in February, according to Edmunds. What also is getting really expensive that many people did not take into consideration when they took out these loans is that gas prices are up 60% year over year. The gas prices are rising. Car insurance is through the roof. We're paying probably 40% more for our vehicle right now, simply because of this situation. I don't know if it's supply chain issues or how they're categorizing it, but it's 40% more, and we shopped it around. We have clean driving histories. I have no idea how, but that's what it is, 40% more. And we even prepaid 6 months up front to save money to get it to only 40% more, right? So things are getting much more expensive. Maybe it's Florida. Maybe it's because it's more expensive to insure in Florida compared to California. But we are seeing increases across insurance throughout the board. In short, that means while some monthly car payments are on par with rent for a tiny studio apartment, and why more drivers are missing payments, a record 12.7% of people who took out a car loan for a new car last month agreed to a monthly car payment at least $1,000 a month, according to Edmunds. That is nearly double the 7% from a year ago and more than 6 times the 2% in 2010. Lucky Lopez, a car dealer who specializes in repossessed vehicles, told Barron's that the share of subprime auto loans that ended up as repossessions has almost doubled since 2020 to 11%. Overall, 5.36% of subprime auto loans are severely delinquent in May. 138 basis points higher than a year ago, according to Cox Automotive. Even more concerning, Lopez said, is that prime repossessions where borrowers had high credit scores is at 4% rate, more than double the usual 2%. While the volume of car loans being taken out is shifting downward, fewer loans are amounting to more debt, according to Equifax. The 6.8 million auto loans and leases taken out this year as of May were 8.9% less than last year, but totaled $201.5 billion, a 7.6% increase in balances. According to Cox Automotive, Moody's Analytics Vehicles Affordability Index, which measures a median household ability to pay for the average price car, as of May, took a record 40.6 weeks to buy one. So the second you own it, there'll be a new model out. Now you know how Apple computer owners feel. This is going to be very, very fascinating to watch this situation unfold. It's going to be something that I think is going to rewrite history. I think we're going to see so many people afraid of new cars. I think we're going to see a lot of people really upset over the next 6 to 12 months as this gets more and more out of control. Supply chain issues, rising interest rates, everything that's happening in the economy really just makes it more challenging, and people start to pull back and just get down to brass tacks and not really live the life of luxury that was afforded to many of us a year ago. People are going to start just getting down to basic necessities. What do you think of this whole situation? Do you believe, like me, that one of the biggest bubbles or the biggest bubble right now is the automobile industry? I think this, coupled with credit card debt and coupled with real estate, these three specifically are going to be really big problems for the everyday American. Drop your comments below. I'm curious as to what you think about this. Subscribe here. Also subscribe to my second channel. It's going to be an interactive call-in show this upcoming week. It's going to be really cool. We're going to talk about real estate, business, the economy. It's going to be one-on-one. It's going to be awesome. Be sure to subscribe there. It's linked down below, top comment. And then if you need assistance fixing your credit, maybe you're, like a lot of people right now, in a situation in which you're being pushed to sign for a loan that is subprime or maybe just not as good as it should be, and you're overpaying for this loan. The best thing to do would be to fix your credit and to increase your score, to increase the attractiveness of you as a borrower to this lender. And the easiest way to do that is to go to cashnow.video. That's cashnow.video. I have a team of in-house credit repair specialists. They're absolutely amazing at cashnow.video. If you want to get on the YouTube grind with me, that's cashnow.video. And if you want to learn about real estate investing, cashnow.video. We have bi-monthly phone calls, 2 phone calls per month, a community. It's really awesome. And I'll see you guys over there. And I'll see you in the next video. If you're interested in being sponsored on my YouTube channel, visit cashnow.video/sponsor and fill out the application.